Welcome to another episode of Daddy. It's your boy Chocolate Dad.
This Saya, aka Saya.
It's your boy Styles.
It's your boy 9-5. Appreciate you guys for tuning in. Listen, man, it's been quite the adventure. We love the support that everybody's been giving us. We love the attention. You guys have definitely been doing your job and giving a lot more feedback, a lot more interaction on social media and the YouTube, and we truly do appreciate that. You guys are sending in comments.
The only thing is, like, the views is not matching the energy. Like, we got the energy, correct. Everyone's showing us love, but when I check the views on YouTube or something, it's not matching that same type of energy.
They all huddling up at one crib and watching it.
It was COVID. Don't do that. Everybody watch at their own crib.
Yeah.
What are we doing here? Listen, man. Watch yourself. Watch it all the way through. Apple, Google, Anchor. It's also on SoundCloud. So listen, it's out there. Check the link in all of our bios. But listen, like I said, we do appreciate you for tuning in. And like I always tell you guys, make sure you tell a friend to tell a friend. And that's how we help each other grow and build and be successful. Today, we definitely have us a very special guest. We have a very important topic we're going to be discussing today. And so we have with us my main man, Samson. All right, he's managing partner at Crownstone Financials in association with Equitable. And we're going to have to talk about a lot of important things here today. So,
see, what you just said, a lot of people don't know what that is.
He lost me.
Because if I didn't know who he was...
Well, we're going to go ahead and let him explain himself.
Yeah. Go ahead, Sam.
Okay, so my name is Samson Akinyoye. Should I look at the camera or
whatever?
No. You go do it, man. This is comfortable.
Perfect.
Regular combo, bro.
I am the co-managing partner at Crownstone Wealth Partners in association with Equitable. So Equitable is a financial company. Been around for about 160 years. So it's a very big company. I want to fully, before we get started, just say that certain things. I do have an accent, so let's get out of the way.
I'm sorry.
I'm originally from London, UK.
You don't say. Me too, but
there's not a great accent, but it's
me
not
too,
mate.
Mate.
It's not the worst.
That's why you don't say cheers.
Speak of that. Cheers. There's certain things I can talk about and certain things that I can't. So I'll try to answer everything as fully as possible.
All right.
So what I want you guys to do is not let COVID be an excuse, because this is my first time meeting Samson. But he did set up my policy and my lady's policy.
What kind of policy?
It was a health insurance.
Was it health insurance?
No, not health insurance.
He don't know what he got.
Nah, it ain't health insurance. It's life insurance. My fault.
He buying something on what he buying.
No, because I got Fidelity already, so I kind of mixed up the two. So yeah, but it was life insurance.
Sorry to hear that.
So, so me and my friends in our group chat, sometimes we're not always talking about big butts and what's going on this weekend.
Oh, why not?
Not always, but
yeah, sometimes.
It's cold outside. Now that it's hot outside.
Yeah. Sometimes we try to keep each other on point and make sure we all don't have to chip in for a GoFundMe account, because it gets rough. And
Real quick about GoFundMes, I'm telling you guys right now, I will never again in my life send money to somebody's GoFundMe after somebody passes away. That shit is at this point, it's fucking ridiculous, bro.
You gotta tell the reason though. You can't just say that and leave it.
Yeah, why? Yeah. Why is that?
And then Steve can talk about what he had to talk about.
I mean, I think his reason is reasonable, because life insurance is super cheap. It doesn't matter like what you think it is. I promise you, guarantee you, it's super cheap.
But you gotta also know what the other side is. Like, what's the reason why you want to go to GoFundMe, and then you're gonna have a reason why you're gonna talk about the life insurance is more important.
Me personally, the reason why I won't go and donate to anybody else's GoFundMe is because the majority, it's a very unfortunate thing, right? And we've seen people pass away for whatever the reasons may be. Unfortunately, the pandemic as well has definitely taken a lot of loved ones from a lot of people, and we truly respect and we understand that. And it's happened to us as well. But I don't think there's anybody out there who doesn't, I don't even know, but who won't eat like McDonald's or go out with their girls to brunch, or you wear clothes. Like yeah, we like to wear nice things and have nice things, but like you can literally only wear one pair of shoes at a time, right? So if you decided, hey, you know what, let me not get these Dunks today, or let me not go to Benihana's for one day in the month, like you can afford to cover your life. Like people will fiend to insure their iPhones. Like I'm not gonna understand what I iPhone, bro.
That's a fact.
You know what I'm saying? Like you have to have car insurance, right? Like people insure like every single thing they probably. Like, you buy something on Amazon, they be like, yo, you want the insurance for like $4? Yeah, go ahead, give me that. Because if it's a break, I'm definitely getting me another one.
Yeah. So it's the same thing as if you could pay your cell phone bill every month, you could pay your life insurance every month.
I have a question for our guest, right?
All right.
Been piggybacking on what he just said, how you would pay your cell phone bill, you would pay, other things that's, really doesn't matter. Why do you think like the world don't push more life insurance than like things like car insurances, phone bills, insurance, things like that? Why do you think it's not pushed more? Because I believe it should be pushed more as hard as they push like healthcare and things of that nature. Because life insurance, you barely hear about it, barely see advertisements or commercials or like anything, or like just in general, your job won't even say it. Like like why you think it's not out there like that?
Well, I think it's more so to do with fear. No one likes to think about mortality. If you go around this room, how many people actually think about when they think they're gonna die?
I thought about shit every day.
Yeah,
I mean, you're one of the few. Right?
I think about it, but not in the sense of death. It's just more so what's gonna happen to like my children.
But
if I'm gone, not necessarily that I'm like.
I mean, I think your group set might be a bit different because I know Chris is a big advocate, but the average community, if you take 5 people, African American guys like ourselves,
I know it's definitely
they don't want to think
0 out of
about
10.
that. They're like, oh, I'm young, I'm gonna live forever, I'm gonna live till I'm 150.
They're gonna give you Steve's answer.
Yeah, no, the biggest thing about me, I like to procrasticate.
Yeah, me too.
I just let go and let God. Let God.
I'll tell you that person.
Let go and let God. Now we
I had a lot going on.
let go and let God. Now we find fish to bury you, right? Like
God got it. So I just leave it in God's hand. But I mean, Chris said it one time, then he said it another time, and then it was that
Chris
last
said it
time.
100 times. I ain't gonna lie. Nah, he said
the
it
last time
100
in the group chat, he's like, "Yo, you guys need to go get some life insurance."
I ain't paying for no GoFundMe. Don't hit my phone.
Yeah, so I'm like, you know what? Chris probably got the biggest bank out the group, and we gonna meet Chris once.
Exactly.
So he's not gonna put up.
Who gonna put up? Shit. Hey, we ain't doing no funeral.
So what I did was, Samson. I never met Samson a day in my life. I didn't meet him till today. So I didn't. It was during the pandemic. I didn't let that stop me. Chris gave me his number. I gave him a call. I set up my policy. My lady set up her policy, and I kid you not, I paid maybe $53 a month. I put more gas in with that gas in my car every 2 weeks.
Well, we never spoke, but it's okay.
Yeah,
We'll
so
speak
I paid like
offline.
$53 a month, and my coverage is like $1 million. So it's worth it. Yeah, it is. It's like $1 million. $53 a month.
$1 million.
Yeah, $1 million.
So if I kill you,
so if I die, you kill me.
If I kill you and took the 10 aside,
Nah, she ain't
I
getting
do not
nothing.
endorse that statement.
Cool. But it's worth it because once I had my son, Chris told me like, yo, you need to make sure he's covered just in case anything happens. You want to make sure. I just bought a house, so I want to make sure the house is paid off if anything happens to me. So I just want to make sure, like as a dad, as a father, that I'm setting everyone up. I'm good. Mm-hmm. If anything happens to me, they're good. They're gonna grieve a whole lot, but we're gonna be up a mill.
The least problem.
Right? Yeah, that's kind of ease your mind. Like before you go. Like, yo, I'm good. Like, if I go tomorrow, shit, everything is gonna be taken care of.
And just like we said in the last episode, right? We were talking about money, and we were like, money can't buy you happiness, and that's true. Like there are people with money who are very miserable, right? But money alleviates. Say what?
Kanye West. I think he's miserable.
I'm sure he's not crying himself to sleep.
I don't know if it's about the money or family, but that's another.
But it's not about money.
But like money alleviates so much stress and just headache in life. And quite honestly, like sometimes it's really not just about money, right? Like you just mentioned, like it's like the ease, like we go out on the street every single day, like you don't know what can happen to you, and we insure everything. We're forced to insure our car, we insure our iPhone, we insure your house, and all that kind of stuff, right? But the only thing that's like guaranteed to happen to you in life, that you will die. I don't know when, and I don't wish it on anybody, but at some point,
it's gonna happen.
In time, this is something that's going to happen.
Why the hospitals don't get life insurance?
Because they still trying to get health insurance. Yeah.
It's just crazy because I got checked up recently this year. I think like a month ago, and like they never. It's crazy. I'm not trying to judge nobody, but like they was quick to ask me, do I want a vaccine shot? then they even ask them on life insurance. You know what I'm saying?
Well,
It's just, to me, that's just crazy. Like y'all offering the wrong thing.
If I could jump in
you're a
on-
professional, like tell me like, or even explain to the people like what exactly like is life insurance? Like how do you get it? Like what can it do? Like just
how does
explain
it
to
work?
the people, right? Because they're hearing it from me, but they probably just like what the hell does he know? But this is your career.
Okay,
This is your
perfect.
passion.
Perfect. So, kind of to quickly answer his question, the reason why the hospital most likely are not pumping it because they're not making any money from it. That's the fact.
Yeah.
That's the reality of it. If
Makes
they
sense.
would make money from it, I'm sure they would start pumping it
Ads
left,
in
right,
front.
because if you think about it, if you go to your bank, you could buy insurance from your bank. They usually have like someone sitting there that can sell it to you. That will go through my company or another company. But most people don't think about that. They go to a bank for.
So you telling me you could get life insurance from a bank?
yeah, most likely.
No, what's
how I
crazy?
got
I
mine.
never heard that in my life.
Yeah.
Never
I
heard
got
you knew
mine.
that?
Nah, I never knew that.
Never knew that.
I
But
only
banks-
heard about the job.
But
like,
banks doesn't advertise it either.
No, but 9 times out of 10, I must say, just based on personal experience, is more expensive when you go for the bank. Because if you think about
They
it,
need their cut.
yeah, if you and you could get insurance from your car company, your car insurance company.
do that too.
But the issue is that's not their main business. So they don't know not that they don't know how to price it, but 9 times out of
Give you
10,
the proper policy
they're giving
that
you a
you-
higher price for the same amount.
It's best to always go
They-
independent.
Yeah.
They did that with me. I don't know. Randomly, they reached out to me. I said,
Oh, word?
Your car insurance?
MCU.
Okay.
Yeah.
They did that, and I just did. It was like $10
That's
a week.
MCU. MCU was good. I mean,
$10 a week?
Yeah.
Shit, I'm about to switch to FC on my phone.
That's why I just did it, because it was one of them situations how you would say that you buy clothes, you do whatever, like $10 a week. I'm pretty sure I buy something.
Bro.
Yo,
You probably buy a sandwich from a
Bro, I
spot
put
and only eat the whole thing.
$68 in
I can-
gas
I can
yesterday,
actually-
bro.
What? How much?
$6.
Yeah.
First
What
of
do
all,
you
why are
drive?
you
I mean-
driving a rocket
Nah,
ship?
nah.
Benz.
I pay about the same with my
I
gas
got a
too.
Benz, but it was
Oh, okay,
$68 I put in gas.
Yeah, my shit was
Nah,
$72.
it's not me. Gas going up. It's not
it's
me.
going up.
For many reasons.
Summertime.
It's still cheaper than it was 2019 summer. So spending $68.
Some ain't here yet. Some ain't
Yeah,
here
that's
yet.
what it is.
It's still spring.
They're making it for last year. We can go nowhere. Though. Yeah, want to go outside?
They gonna ease it up.
Yeah. So another thing we didn't touch about, Sai said he was getting a checkup. So one of the hurdles of getting life insurance, and I stress that you guys get it a little bit earlier in age, is because you have less underlying issues, whether it's
Prostate
like
cancer,
diabetes
something
or
like
High
that.
blood pressure.
high blood
Whatever.
pressure, whatever it is. They count that towards your policy because stuff like that can kill you a little bit quicker. And even though they're giving you $1 million when you die, they don't want you to die tomorrow.
Yeah,
So that's. I'm glad you said that, right? So that's a really good question. A lot of people don't really understand, right? So like, people have this thing in their minds, like especially in the Black community, it's like I'll wait to get like life insurance when I'm like getting my last rites.
That was me.
Like I'm waiting to when I'm gonna die, I'm gonna buy it
right now.
So like, why should people get it like as soon as possible? And how early can you actually just get like life insurance?
Okay, so when it comes to life insurance, we're talking about 3 things that matter. Usually your gender, whether you're male or female. Females apparently, statistically, they live longer than men, so it's cheaper.
Yeah, they're stressing us and we die sooner. Shit.
I'll let you say that because you're married, and then move on. 2, your age. The older you are, the more expensive it is. 3, your health. So typically, the younger you are, that's when you're in your best
healthy,
health.
yeah, you ain't got
Usually. There's very few of us, as we get older, we get healthier. Because, you start working, you get tired, the kids come along, as you get home,
Start
you
doubling
have
up,
to
on,
work
doubling up on
out,
plastic cups and stuff.
start eating, exactly, you got to sneak out to get 1 or
I ain't
2
drinking
drinks
no
here and
more.
there. So you...
I got my policy already.
Yeah, I'll leave that at that. But you take all that together, and that's how the companies or the underwriters kind of underwrite you and see how healthy you are. So what a lot of people do, like you said, they wait to their 50s, 60s. The average health age, I believe, is 55 when people get life insurance. So
For real?
yeah, this was a few years ago, so it might be a bit younger now because
So people get life insurance at age 55 the first time ever in life
some people
in the U.S.
because a lot of people push
That's
it off.
crazy.
They push it off, and then what
I
happens?
think you're waiting till you're 55 because you don't have it yet. We had this
Nah,
conversation maybe
no worry, yeah,
3,
nah,
4,
nah.
5 months ago.
It's a reason. Don't worry, I'm gonna get my joint. then when I get it, I come back here and I update everybody.
It's all mindset. Is what I always say is about mindset. Because what happens is when you're young, you're living fast, you're making money, you're happy, you're just bam, 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 bam,
How
bam.
about when you're young and you broke?
Same thing, you're as they say, social media, everyone's making money, right? So everyone looks like they're making money. So you just live in life. But as you get older, your priorities change. You have kids, you have family. You start thinking about generations.
Your life is over almost.
55 is young.
What grandma turned 99?
Bro, let me tell you, when I turn 55, boy, I'm just saying, whatever year Lambo that is,
that's like,
living
you live
crazy.
55 years already, and like,
that's young. You haven't even retired
listen,
yet.
I see some
How
people
many
when they
people
make
got
it past certain ages in life, man. 55 is a long time.
But think about it, right?
long.
Like, where we're from, a lot of people don't make it to 18, 21,
I'm saying
20.
50, 55 is shit. You
50,
decide.
but what I'm saying, so 55 is a
retire
long
and all
time.
that.
But
You make life insurance.
you
now.
got a lot. You have a lot to like. Imagine how much you accomplish in that time, and how much more you can then get. Because like, I had a conversation with somebody at my job, like 2-3 weeks ago, right? And they were like, "Oh man, did you see the 401k has been going up or whatever?" I was like, "All right, whatever." Because in my mind, I don't look at my life like I'm gonna wait and work for 30 years and wait to get this check to live my life. So it's like you're setting yourself up to make sure that you work for yourself and you get your own money. You take care of those things. By the time I'm 50, like I said, when I turn 55, bro, I'm gonna be doing some wild shit.
Right,
So I'm glad I got the insurance now because listen, man,
I got a question.
I'm gonna be flying helicopters.
Smoke mad cocaine.
Ready to start after they're on drug testing at work, right?
I would have to say he's not smoking cocaine for
you don't
insurance
smoke
purposes.
cocaine.
Sniff cocaine. So, question: say we talking about the 55, right? Like saying, I said that's a long time and things like that, right? So, being like people, us and you stating like get it early as possible, right? So, explain what kind of policies can you get? Because I know there's a few. It could be 10, 20, 30 years, and also after that term is up, how can you reapply and do it?
Okay, so there's really two types of policies. There's a term and a permanent. Those are really the two. Regardless of what anyone says, there's two types, term, permanent. A term is think of a house. You rent a house. You lease it for 5 years, 10 years, 20 years, whatever it is. You don't own it. So that's why it's so cheap. At the end of the day, the insurance company...
Oh, man.
Pretty much, yeah.
I got mortgage for 30 years, yeah.
What you mean with him? I don't know. How you gotta ask him? I forgot.
I got you. My fault.
So with the term, 99% of the time people outlive the term, unless you get it when you're 70. But 99.
What happens when they outlive that?
So typically you have three options. Typically you can convert it to a permanent policy, you can renew for a new term, or you can just cancel it and then move on with life.
How long is the term?
The max typically nowadays is anywhere from 20 to 30 years. Mm-hmm. Some companies still offer 30 years, but very few. Very few are doing that.
Do your company offer 30 years?
Not anymore. Anymore.
Why is that?
Well, honestly, I don't want to say it's not profitable, but it doesn't make sense. 9 times out of 10, most people after a few years, they end up converting to a permanent because it makes sense, which kind of leads us to the second side. When you have a permanent policy, what you're doing now, you own your policy. You don't have to renew or do anything new.
It's like buying a house cash.
Well, not buying a house cash. Basically, what you're doing now, you're going from leasing to having a mortgage. And within a mortgage, what do? You build equity. Over years, if you want to, you can borrow against the equity. Take money out tax-free. A lot of people, especially our younger crowd, they're doing that for retirement. As opposed to a typical, not to preach too much, but
preach. That's what we here for.
401k is a phenomenal investment. It is. But it's also one of the most dangerous investments tax-wise, because most people don't realize once they retire, they'll have to pay taxes. Depending on your tax bracket, it could be as high as 40, 50% of every dollar you take out.
So 40?
Yeah, depending on your tax bracket.
40 or 50%.
Tax bracket.
Okay, this is move on. So the reason why I say that is because your tax income, even in retirement, is based on what you make. So the idea is we all want to work long. We all want to make as much money as possible. And then when you retire, you want to keep making the same money. But people don't realize when you're making that much money in retirement, you're still paying taxes.
Get that money out.
Uncle Sam needs to get paid.
Yeah.
Not only are you paying the taxes on the money you put in it because it was pre-tax, but now when the gains on it over 30, 40 years.
Which is substantial.
Right, so back to the permanent policy, right? Say it helps you, you can take from it, right? What's the max on the permanent policy? Because you stated how the term you could go from term to permanent if you want. So permanent you could just like extend it. It's nothing after
Permanent
permanent.
is for your life. You own it for your whole life.
Oh, so it's no cutoff.
There's no renewing. There's none of that.
So,
unless you want to.
example, say I get a policy like today, right, and I do permanent, and it's like $100. It'd be $100 for the rest of my life.
Yeah.
That's
But
it.
here's the key.
Even if God forbid you get like cancer or something like that, they can't change the policy because
you locked in.
when you bought in,
It's based on when you
it
were.
was based on how your health was. You understand?
So that's why it's best to get it the youngest as possible.
100%. I always say if you have the choice and budget is open, the younger you are, you should get permanent. Because if you wait, you say you get a term, and then you wait 10 years down the line, you're 10 years older.
Shit.
Your health could still be the same, but you're 10 years old.
10 years is a long time
Which
to be
is
healthy.
it's morbid to say, but you're 10 years closer to life expectancy.
So what's the youngest you can get a policy on somebody?
It's- as long as you're breathing, you can get policy.
So talking about my baby born fresh out the womb.
Listen,
The doctor smack his butt. He scream. I can get an insurance policy.
I have a guy in my office right now. Every child that's born, from the minute, literally as soon as they come out the mother, he's on the phone. Let me get this X, Y, and Z, blah blah blah.
Damn, he would say congratulations. That's fine.
No, he's not playing games. Because
but for that sake, you don't need like the child's social security number.
So okay, let me not exaggerate. Once you have the social, but
Alright.
you literally can start as soon as you
But
have a
it's soon.
social.
You start
yeah.
really at an
Yeah.
early, like days old. Like you could get a all right.
Yeah,
I
because
didn't know that.
this isn't anything new, by the way. I don't know what your audience is, but in other communities this is happening. Everyone is okay. There we go. I like it. But in certain communities, this is like a standard thing. Like there's a certain community, I won't say, but people in my industry.
I already
that
know.
know. Are you okay? Are you
Yeah.
okay? So
The name of the show is Dadding and Shit.
So this is shit
Say
part.
whatever
Okay.
the hell we
Okay,
want.
there we go.
Because we
Yeah,
The
white
ladies
people.
saying.
White people gotta do this
Jews.
early. We
Jews.
talked about this in our
There we
last
go.
episode.
There we go. With the Jewish community,
The Jewish
and
people.
I
Facts.
really applaud them for this. They come together and they read. Essentially, what they do a lot of times, everyone gets together. They find the oldest person in their community,
They invest.
and they they invest in a policy for that person. When that person passes, the death benefit pays out, all tax free,
Exactly.
and
Yo,
then you
imagine
re-up.
that, yo. You sitting at home, stirring a cup of tea.
That's
Everybody's
why-
like, yo, I got 50 on him. I got 100 on him.
That's why.
Like, damn,
Back when
son.
we did that, you know how like
remember-
lit, like.
I remember
like-
somebody told me. I guess you could say they invest in death in a sense.
Well, I mean,
But you want to. It sounds bad.
It's a sure,
sounds
it's a-
bad,
it's a-
but
it's a sure bet, though.
Yeah,
unfortunately,
but that's what it is. Though.
Unfortunately, no. Unfortunately, in my lifetime, in my career, I've had to deliver $1 million checks to people, and it's not a great position to be to sit down there, grieving wife. I mean,
That's kinda crazy, yeah.
Literally, the check is so big they have to do it in 2 separate checks. It can't be one check. Like if you've ever seen, I know all these rappers talk about, but to actually see $1 million and you're just like, okay, I'm about to hand this over to the lady, but she's literally grieving, like crying like a baby, and all you can do, you can't say it. There's no words. She just lost a life partner, and then
Just
you're
like
giving off the
sign
check, and then at that point, it's just a different mindset as opposed to if someone passes, but there's no money to hand over to help
because
with
the
everything.
next problem
Yeah,
is burying the person.
but
The
now,
next problem,
okay,
how
so
you pay
now
your
let me
mortgage,
ask you, right?
There you
So
go.
understandably, right? It's a very uncomfortable position to be in, right? But isn't it easier to walk in and hand them $1 million versus a fucking pot of chicken?
100%. My slogan, well, it's not a slogan, but my thing is, and my partner's thing is, we in that particular situation, we would rather you not have to worry about financials. Just worry about the things that are important.
Right.
Taking care of yourself, taking care of your family.
What's the tax like on $1 million check?
No taxes.
Say that again for the people in the
No
back.
taxes.
No tax. Hold on. So
whatsoever.
I could like.
Insurance.
No
I have
tax.
another question because say I want to have an ignorant moment, right? I get $1 million check. I decide to go to the checkout spot.
Check catch
Yeah.
your spot.
Well, say I want that bread right now.
First
Say
of
I
all,
want that bread right.
They don't
I want
got
that.
Bro, they don't have it for you.
So I'm
I wouldn't recommend
I got
that.
the check. I got the check.
It's gonna
What's
be
up?
your problem.
No, it ain't.
Listen,
Why would,
my
you,
money?
why would you take a
the
check that
tax on
has
that?
no taxes
tax on that
and take it to the checking
Listen,
place?
listen,
Wait,
listen,
tax
listen,
is
listen,
what it is.
But
I'm
honestly,
just curious. There's some people that make
but
that.
it doesn't matter because even when you cash a check at the checkout, they don't tell you, they don't take taxes from you.
They're gonna
No, but
just
they take
the fee.
their amount. They take
Oh,
their
their
fee.
fee. Oh yeah,
So you don't
yeah,
give them
yeah,
like
yeah,
nothing.
You
yeah.
do that. I
Oh,
mean, just go
yeah.
to the
I'm
bank.
just curious. I'm just
nah,
I mean,
curious.
I
Don't
guarantee
violate.
you. I mean, hopefully none of you have to experience this anytime soon. But I guarantee you, if you go to a bank, the teller's just gonna be doing what they normally do. As soon as you hand them the check, they're gonna be like, They'll look at you, wait, how much? That's what they always do. Because no one, regardless of who you are, no one ever sees that much in cash. Just sitting there.
Got you.
I would never take it because they might call, hey, there's this
Honestly,
guy.
you can't even take $1 million check to the cat.
They probably gonna cash it.
They probably have a limit. But let me
They ain't
ask
gonna have that
you.
money even
They don't
sitting
have
in
them.
the
They
bank.
don't have the on hand.
Let me ask you a
Well,
question.
that's crazy. No
So
tax.
you said that the Jews in their community, they basically invest in someone. My grandfather just turned 99.
Oh, that's not happening.
Nah, he messed up. I see where it's going.
Too old. It's too old. You gotta catch them. 'Cause
I'm trying to invest before you kick it.
What?
Dude, you're going to hell.
But it wouldn't be too late for them to get it. It's just would
At
be
that
It's gonna be
age,
high.
it's
It's gonna be like
What?
$1,500 a month.
So
No, I because you have to think about like this with insurance companies. At the end of the day, it's like two sides.
They won't
of,
even take 'em.
In their eyes, they're betting that you live a long, healthy life.
They're not in the business of giving
Yeah,
away
exactly.
money.
At 99, they pretty much are assured that they're gonna collect the small, even if it's $1,500 a month. It's nothing.
turn
It's pennies.
around.
It doesn't make sense. And at the
For them
end
to
of the
cash it out,
exactly. At the end of the day, insurance companies, there's a reason why they've been around for 100+ years. They're here for making money. It doesn't make sense. Now, if you catch them when they're 80, 75, now you're in a great
See, my
place.
grandmother's like 85.
She just hit the mark. It can't happen now. But if she was like 80, 81, you're in a great
Yeah,
place.
so that's the cutoff time, like 80 around.
Especially
around,
now with COVID,
around
that's 80.
mid 80s, it's harder to get life insurance for.
If they're in great health, like me, well, not me personally, but I know people that have been recently insured and they're 77. So you can, if you're in good health, because we all know, unfortunately, on the news, we think that most people older are unhealthy. But I'm sure all of us here can name someone that's
least one.
older,
Yeah,
that's
that's
healthy.
like-
My grandfather 99. He
99.
healthy.
Yeah,
He-
just-
He not
Yeah.
healthy, but he healthy.
yeah, but I mean,
Yeah,
the
he
age-
around-
age
he around
stuff is
moving
like
around,
that.
kicking,
He
bro.
moving around. He
Yeah.
ain't a
Busting
cane or
moves.
nothing.
Yeah,
Now,
I mean,
let me ask you a question. I don't know if this is kind of personal, but do you have life insurance with your own company, or you got another?
so certain things I cannot and can discuss. I can say I do. So just to quickly get back to your question as far as the different types, I have both types, just mainly because they have different purposes.
You have both types.
Yeah,
so,
term
so,
and permanent.
So
Yeah.
you're telling me a person can have a
Yeah.
permanent and a term. Can you explain how does that work for one person?
So there's no laws to this. There's no one telling you what you can and what you can't have. Typically, the guideline is, 30 times your annual income is what you can have in total coverage. So how you split it up as term and permanent is really up to you. So usually when I see that people get a term for, let's say if they want to cover a mortgage, or if they're a business owner and they have a debt that they need to back up just in case anything happens. Now, or if they're younger and they want to get something for now because it's a cheap price. But then on the other side, permanent, now you're talking about building equity. There's a difference between renting and owning and building wealth.
Facts.
So when you look at it that way, if you're doing college saving, retirement planning, or just owning, you really just want a policy for your whole life and you don't want to be bothered with having to do it again in 40 years or whatever, then that's when the permanent makes sense. And there's different ways of funding permanent. You can fund it in a way where you're just paying for the cost, meaning whatever I need to pay just to make sure I have the coverage, that's what I'm paying. Or you could fund it in a way where you really want to invest within the policy. That's two different prices.
So explain the difference between the two.
So if I give you examples, not exact numbers, but let's say you have $100 a month for a permanent policy. If you're 30 years old, let's say $300,000, $100 a month. Let's say that's paying just for the cost. That's just to guarantee that for the rest of your life, you're covered for $300,000. Now, if you want to invest within that policy, I would not recommend, but
That's your way.
anything above that would be more so investing. So $200, $300 a month. Because now what you're doing, when it comes to insurance, there's a cost and there's a premium. The premium and the cost are two different things. Too many times people say, oh, that costs too much. No, it's because there's a cost, which is the amount that guarantees the insurance company will pay your death benefit. And anything above that is being invested. So that's where the difference.
So explain how the investment part works.
So
each month.
investment really depends on yourself. So if you sit down with your financial advisor or your investment advisor, they would break it down with you. Listen, are you an aggressive investor? Are you conservative? Whatever it may be, and they will help you choose that investment within the policy. So when it comes to insurance, there's a whole wide world. It's not what we think it is. It's not that, you die and then money goes somewhere.
There's certain things you can do while you're living up to that point, basically.
If people listening and everyone here, if you get a chance just to type in, rich man saving policy, that I had a CPA, I have a client, a CPA that I also work with, and he was telling me, listen, just explain to him what the rich man's savings policy is. And basically it's a known kind of secret within a certain, income bracket. Tax bracket pretty much. That is a way for you to save money long term. It's not for people that are short side. I will tell you that. If you want to invest and you want to see great returns in 5 years, 4 years, it's not for you. But if you want to be on that level, like the Warren Buffetts of the world and so on and so on, now you're talking about 10 plus years. You're thinking long term.
How does that work? What's the plan for that?
It's basically you're investing like a regular investment. Pretty much like a regular investment account.
Out there, I like numbers.
Oh, the number? Why? I mean,
average.
Honestly, think of it this way, because I always said, I was just talking about this earlier on, I can't guarantee numbers, and anyone that can guarantee numbers, they're pretty much lying to you. But if you're looking at market average, this is statistics, so it's not me saying this, but if you're looking at market average over the last 100 plus years, the S&P 500 has been around, we're talking about 9 to 10% on average on a yearly basis. So you take that over a 20-year period and you can work the numbers out. Think of the difference in tax bracket. So I mean, I always say, oftentimes, there's a big difference between permanent and term. Term is really cheap because you're renting it. Yeah, that's really what it is. But it's great for where you are as far as budget. But if your budget is open and you have the bandwidth,
why not
go permanent? 100%.
So let me ask you a question. With term, right? If you're paying it off and God forbid you get ill, when you reapply, they do another medical test and then you have...
So with some companies, I can't speak for all, but I do work with a few. With some companies, majority of them, they have what's called convertible. Meaning at any point between day one to the last day, you can convert it to a permanent policy. No questions asked. And that is good because life happens, right? Someone could have had a term from 2 years ago. God forbid, last year they got COVID. And let's say they got a bad news and the doctor said you're not going to survive. At that point, you can convert. Well, you don't need to because you're going to pay out regardless. But let's say you got COVID and they recovered from it, but now because of the COVID, they have a terminal illness, which can happen, and we've seen that happen. If they were to try to ask or try to get reinsured at that time, most companies would say no. But because you have that term, it guarantees your health and you can convert.
Gotcha.
All right, I'm going to bring it back to take it from your policy, like an investment. How does that process work? If you have a permanent policy, you want borrow money from it. Explain the borrow money as far as because do you have to pay that back, or is it you take it, you're okay, or do they tax it crazy, or is it do it bring your monthly payments down? And a little bit more details of
so that. When it comes to that, first and foremost, definitely you should speak to your advisor, let them kind of go into more detail with you. But typically the way it works is if it's properly funded, that's very key. Because too often people fund a permanent policy, meaning pay a certain premium into it. They put the bare minimum in it and then they want to pull money out. That's not the best way. Okay. If you do plan at any point that you're thinking you're going to take money out, you need to fund it that way. Because if you're funding it paying the bare minimum, you're paying for the cost.
You got to handle like a savings account.
You got to pay a little extra.
Exactly.
So a credit card bill, you never pay the minimum balance.
Exactly.
You double or triple times the minimum balance.
So how much, I don't know if maybe it's probably a dumb question to ask or a generic question.
No dumb questions to him.
But what would be the max you can take out one time if you wanted to take something out? Say you wanted to buy a new house or start a new business. You hey, I got this insurance policy I have for the last 7-8 years. I know some equity in that. Let me go tap that real quick.
So to answer your question there right off the bat, 7 to 8 years is not enough time.
Yeah.
It's not enough time. If you're looking to use insurance for an investment, I'm talking at least 10 plus years at the very minimum. I know some people will say 7 years, depending on how well it's funded. If you're putting $50K a year, that's a bit different. But most people aren't doing that much. Oh, okay. So 7 to 8 years is not enough time.
I got two questions, right? So is putting. All right, so I've read something, right? I don't know how long ago it was, but this guy and looking to retire, right? And we talk about his 401k and stuff like that, right?
Mm-hmm.
So rather than like taking his money and his cat doing it monthly, he was doing well for himself. Like he had a job, he probably retired after 30 years and went and did something else, right? So what he did was he took his 401k policy, right? Cashed it out, whatever the tax was, screw it, pay the tax, and you cashed it all the way out. But he took that money and he bought a whole life policy with that amount, knowing that, like, say it was $300,000, it's gonna get him like $700,000.
Explain that. So like he paid for the whole policy up front.
Yeah,
One time you could do that.
You could
because
do
that's
that.
a
You
way
could
now to like and reinvest that money.
So
right?
explain that. How like save a policy like $300,000. I now come with you cash. I'm gonna pay this $300,000 out front. That would be considered a permanent property only, right? And how does that work? Like after I do that, how would that benefit me? What's the guidelines?
So if you look at numbers wise, if you take paying all at once versus paying over 20 years, 30 years, 9 times out of 10, if you calculate the whole amount, so you take how many premiums you put in for 20, 30 years versus one time, it's cheaper to do it one time. The difference is now you're putting it over is a lot less when you tell someone, okay, $50,000 up front or $100 a month for the next 50 years. Most people would choose $100 because why would I pay $50,000?
Yeah, but what the guy in the article, what the guy was doing was he didn't need like that 401k money. You know what I'm saying? Like he did it for himself, so he was living fine. Right? He did it for the flip. So he like, yo, I take this $300,000. What can $300,000 buy me in a permanent policy at 62? And they're like, yo, we'll give you $750,000. Like, all right, cool, because now that's tax free. $750,000 they can do, right? And then the other part of that was a lot of folks, like people say, all right, you know what, like I'm not gonna move out, like I'm gonna wait till my parents die. You know what I'm saying? I'm gonna get their crib. But then
Who says that?
I'm just saying, like, not like it happened. Like people, parents who own their homes and stuff like that, they're like, yo, like I'm not gonna move out. I'm gonna wait till my parents, pass away. And this is my crib. But now they get the crib. They forget that
they don't forget. They never
don't,
knew.
You're right. Appreciate that.
They don't
know how to know.
Hand to the crib.
Uncle Sam shows up like, yo, word. Oh man, probably my condolences, though. Whose crib is this? Well, now it's my crib. Oh, you transferred it? Yeah, it's in my name.
All right,
cool. How much is crib worth? Like $500,000, $600,000. I'm gonna need like $60K, bro, because they have to pay transfer taxes, right?
Estate taxes, yeah.
Isn't that like a great, like when you do have life insurance?
That's a great time.
Your parent passed, they passed away. Use that money now. You can keep that house in your family name. Because a lot of people I've known have had to sell their family home they've had for 4 or 5 generations because there was no life insurance.
They wasn't ready to handle it,
right? So what would be the best way to like set that up for like a parent or grandparent? Or if people want to live in that situation or whatever.
So what I would say first and foremost, typically, each state is different and federally, but there's a certain amount that you can inherit as far as assets from your parents, whereas non-taxable. So you should definitely look at that, consult your tax professional, any estate planner or estate attorney, because they will be able to give you that number. Depending on the value of the house, you may not have to pay estate taxes. So that might be something that you can inherit. If it's a spouse to spouse, then you're pretty much cool. But as far as kids, but what to your point, what a lot of people are doing is they get policies just for the taxes. So they don't care about anything else. Let's say I'm worth 10 million. I know my state tax is gonna be a certain amount. Once I take federal, state, city, if you're in NYC, you add that all together. You don't want your kids to sell off assets to pay for their taxes. So what people do is they take a percentage of their assets or their net worth and use that to pay for a policy that will pay for the taxes.
So you can add that to your policy, like your properties, into your life insurance policy.
Well,
so
it's not necessarily adding it to it. It's just basically you're getting the policy for that purpose.
Right?
Think of a permanent policy as a blunt tool. You can use it for a blunt tool, meaning you can use it for anything.
Okay.
It's just a question of what you want to use it for. Whether it's for college funding, retirement funding, tax purposes.
But can you use it for multiple reasons?
Yeah, why not?
And
because back to your point, right, Samson, with being a blunt object, right? So, and the reason I say a lot of the questions that I have is like full disclaimer. So in one of my previous careers, I did financial services.
You had a few careers, man. You had a few careers.
You know what I mean? I've been
fucking Haitian.
Let me make this clear. He didn't have jobs. He had a few careers.
So I've done financial advising and things of that nature, right? No longer licensed, so nobody hold me to whatever's going on. But this is actually very good information here, right? People a lot of times use insurance policies, and like you mentioned before, like it's a blunt instrument object. But what exactly like is estate taxes? Like, 'cause people don't really understand what that is. Like what does estate taxes mean?
Okay, perfect. So right off the bat, again, I would say definitely consult with an estate planning attorney or a tax professional because they'll give you the exact numbers. But to answer your question, on estate taxes, usually whatever you inherit from parents, grandparents, wherever it is, Uncle Sam needs to get their piece of the pie.
Always.
That's it. That's where it comes down to. What people think is, I have a lot of people that say, I built up all these assets. I have all these brownstones in Brooklyn and X, Y, and Z. My kids are going to be good. I don't need a policy. But then I hit them with this question. You spent 20, 30, 40 years building up all these assets, right? Yeah. Do you want your kids to keep it? Yeah.
No way.
So how do you think they're going to pay for the taxes?
No way.
Are they millionaires? Because every brownstone, from my understanding, in Brooklyn is at least $1 million plus.
Facts.
If you have 10 of those, because back in the days you could get, if I'm not mistaken, like 10,000 a pop for a brownstone in the 80s or whatever. So if you have 10 of those, if you're one of those lucky few, we're talking about
10
$1 million plus. That's 10 million. Your kids are definitely going to be hit with taxes.
Nasty.
And how are they going to pay for it? The young and wild.
Uncle Sam when they brought now.
Imagine a 25-year-old inheriting all that from his grandparents. What's he gonna do? Wait, hold on. You telling me there's
He's gonna
10
sell
million
it.
here?
Yeah, exactly.
So I could sell 5 of those and get 5 million
Yeah, I'll
and
take
live
that.
life. Let me get that 5 million, pay for the taxes, and I'll go to Miami
Right,
for a
they
few
don't
years
legacy.
and I live life. That's what's
So-
gonna happen.
So question, right? What's the difference between like a trust, like trust and like life insurance? What's like the difference?
So I think they both work hand in hand if done properly. Again, estate planning attorney. But it's very important that they work together because a trust is probably the most ironclad document you can have. A will is great, but that can go to court, and if you have a good attorney, they can break that down. A trust, you're in a good cognitive place where they can't say that you were in a good space. You signed that into law. So what a lot of people do is they make the trust the beneficiary for the policy, or they put all their properties within the trust. So they transfer it from their name into the trust. So what that does is, even on their passing, there's no worries about tax or estate taxes because they weren't owning the trust. The trust was, the properties were owned by the trust.
That's a kicker.
And the
That's-
trust, I dropped some jewels.
Sort of like a company, in a sense.
Yeah. So when you create a trust, what you're doing is you're creating a separate entity. It's recognized by the government. So the trust is separate from you.
It's like an LLC.
Yeah.
And depending on the type of trust too.
It
Oh,
can't.
that's lit.
So there's 2 different types of trust. You can have an irrevocable trust, which is separate from you. Whatever you put in that is separate from you. You can't get it back. Or revocable trust, where if you put something in there, you could take it back out. So the government doesn't kind of see that as a separate entity. But
Yeah.
irrevocable trust, that's separate from you. So once the properties are in the trust, now even if you passed, then it wasn't under your name. So all you would do is just name the executor to the trust, which would be your kids, for example.
Question for you, right? So for just only speaking from my experience, right? So in terms of like trust, right? So my mom, when a couple of years back, she had an ailment, and so we went and saw an attorney, right, an estate attorney. And so one thing that they asked us about, right, is like in the future, if you want to get like certain kind of government assistance, stuff like that, it's like she owns her crib, she has all these type of things or whatever. They're like, well, if you're worth a certain amount, you can't get assistance. So they're like, yo, put everything you own in a trust, but it has to be for like a certain amount
5
of time,
year look
right?
back, yeah.
Right. So there's 5 years amount of a trust or whatever. But now, can that trust can you purchase like insurance on people through the trust and stuff like that?
Yeah, so the trust can own a policy because the trust has its own identification number, EIN number. So the trust
like
can own.
business.
Yeah, it's a separate
That's
entity.
crazy.
It's a separate entity. Yeah, and this is something that's used in the world of business all the time. A lot of time when people say, "Well, this person's a million," like if you go to Long Island, there's a lot of millionaires that are living off government benefits because everything is in a trust. So legally,
You can't touch me.
legally as an individual, they're broke. Pretty much, they're broke as an individual. But
That's
their
what 50
trust,
did. It's the same thing as
So-
claiming bankruptcy.
bankruptcy. Don't get me started on that because when
Get you started.
Let's get started.
Yeah, that's
when 50 filed for bankruptcy and everyone was saying he was broke, I was just like,
You crazy.
anyone that knows business and finance knows what he's doing.
That's what you do.
He's basically saying he doesn't want to pay the debt. That's what he's
Yeah.
saying. So legally, they're saying, oh, he doesn't have to pay for it. Essentially, obviously, an attorney would tell
He
you.
drove through,
I'm
like
about
a
to
week
file for
later, he
bank-
drove through
yeah.
Flatbush in a freaking road. We
Nah,
like,
no,
bro.
before that, now when he did that, he had the smart card. Like, look,
Yeah,
bro.
listen, you gotta be.
He just
so
trolling.
savvy.
Like, it's just
You
like,
gotta be
yo.
savvy.
I think it's like I said, a mindset thing and a community thing because I guess in the hip hop world and the urban world, filing for bankruptcy is like a
bad
it's a
thing.
taboo.
Yeah, exactly.
But in the corporate world,
the
companies
best
are
thing.
companies are out here. Donald Trump
Example,
is
you
known for it.
you know who did that recently? We all know Toys R Us filed for bankruptcy.
And
right?
they
I'm
coming
And guess
back.
what? And they coming back this year. You know why?
Well, they got a new investor that's gonna.
Yeah, no, but I'm
bring
saying
back
that
the-
that was all part of the plan.
Yeah.
A real big time company is not going to just file bankruptcy and go out of business and call it quits.
Yeah.
Somebody, I'm sure before that conversation had it, they meetings and all that. They said, listen, file bankruptcy. We'll let it rock out for about a year, 2 years. We're gonna come and invest this much
You
money
know,
back into the
Bobby
company.
Axelrod,
And that's what happens. And that's just a rich, like a wealthy mindset. Like, all right, as a company as a whole, it's best that we do this. It better us in the future.
Yeah.
So let me ask you a question. I got these
boy.
student loans. They're about 100,000. You think I could file for bankruptcy?
I don't know anything about that. I'll definitely say,
I'm
yo,
gonna talk to you.
I'm gonna talk to you after the show. This is what you gotta do,
I'm
right?
gonna talk to you
Yo,
after the
bro,
show.
Bro, this is what you gotta do. You gotta
No,
get.
I'm banking on Moneybag Joe to get these loans wiped away. That's what I'm
I was
banking
gonna
on.
say, have a conference call between Ace One Credit and him.
Oh, you know,
You gonna be a millionaire in a week.
Nah, you fucking around me a millionaire with no debt.
you know what? I will say
They're gonna be
one.
calling you like, how you do that, bro?
I will say one thing though. I know a lot of dentists, and this ain't personally, just in general. I know some dentists out there that they still have hundreds of thousands in loan, and they can afford to pay off. Dentists are making $400 or $500 a year. But they look at me like, why would I pay off? The payments are dirt cheap. Instead of the amount of money I'll pay off, I can invest it, and
That's
I can
a
make
fact.
money over money, and just continue to pay the loan off.
Yeah, that's why right now I give them the minimum balance, $83 a month.
Listen, it's
Take
all,
that out of the 100K I owe.
I think I said that a few times. It all comes down to mindset. You have to. It's all about changing your mindset.
No, but the thing is about the mindset. The mind is one thing to say change the mindset, but if somebody is misinformed about information to change their mindset, that's why a lot of our people are stuck in that negative mindset because they don't have the resources. Or it's two things: either they don't have the resources to do it, or they just don't want to do it.
Yeah.
and
It's also
they have the
misinformation.
resources.
It's not even necessarily the misinformation. If you just don't have it, you're always gonna be
Yeah,
misinformed.
I'm saying
Yeah.
you
But
just can't get the
I
resources.
feel like it's purposeful, right? Like these things are very purposeful because like certain companies and things in the world, like they're not gonna come to the black community and be like, "Yo, listen,
fact.
this is what
They
you
don't
should
want to
do."
see you
And
winning.
not at all.
As a
and,
fact.
I'm
See you
gonna
in
tell
the
you right now, like so,
penitentiary.
like when I used to do like life insurance things of that nature, when I talk to any of our people, they'll be like, "Yo, all right, well, what can you afford?" And I'm like, "It was $20." I said, "So then do the $20." But then they'd be like, "Well, I don't know because I didn't get a Metro card this week." Like it's a bit like it's and don't get me wrong, like I get it, right? I get it because in their minds, like life insurance is not for you per se. In their minds, like life insurance is not for
It's
them.
like F everybody else.
It's not a tangible thing. Like I'm not like if I go to McDonald's, I get my burger and fries. You know what I'm saying? If I go to the dealership, like I get my car. You know, it's mine. I buy my clothes. It's physically
nothing you
on
get
me.
in right now.
But they like, oh, well, my parents didn't do nothing for me, so why I made it. My kids will be okay. And it's like,
It's
yo,
just
like
it's an ignorant mindset.
I'm like, yo, bro, like if my like not me, but like if your parents left you $1 million, where would you be in your life right now? Like, you would definitely be doing way different things than what you're currently doing.
But that's real. Even that mindset is still going anyway, too. So even if somebody left you $1 million and you all jacked up, that $1 million ain't going nowhere anyway.
You gonna blow that.
It's not,
You
but
gonna blow it.
But
gonna blow
even if they did blow it, right? They would still have at least an option to be. They have potential to
Now-
be a leg up from what they were
Yeah,
doing.
because I feel like if any people or families have a life insurance and it's a certain amount, I'm sure that's a conversation us as a community to have with our children as we get older, as they get older to understand how this works. And I believe that falls on the parenting, and that's why you should parent your kids and understand these type of things, the financial literacy and things like that. So you be like, hey, listen, I'm not wishing anything bad on myself, but hey, listen, have this set up, this you get this money, that money. Listen, when I go, you may have to pay this in taxes, this. If you explain things to somebody, no matter how ignorant or how not willing they want to listen, understand it, but once you explain it to them, I'm sure when it happened, because it's gonna happen. Say you explain it to them like I say early on, like
10, 9, 15.
like 13. I say teenage age, 13 years old, right? Going to high school or some shit like that, right? Explain that to them. They might hear, yeah, whatever. But like, say like 30 now, 31, a little older now, 15 years plus later, you go, oh no, yeah, nah, got this bread now. Hold on, let me. Like, I just feel like it just really depends on the parenting and like the kid, like how mature they is and how ready he is for the world. And you know, because some people just gonna be stuck in a hood mentality on some like, I don't care, I'm gonna blow this. So that it's messed up. But most of the people in the hood gonna go with the, I'm gonna blow this, and the parents not gonna teach them it. And it just misinformed.
So can I quickly jump in there?
Sure.
So if you're a grandparent or a parent that's listening or that has a policy like that, like it's a good amount, I would say a good strategy would be to establish a trust and make the trust the beneficiary to the policy. The reason why I say that, if you're worried that your grandson or your son or your grandchild, I don't want to put on all the guys, but if you're thinking they're going to blow the money, you put that money into the trust, and then you have certain guidelines.
Yeah,
exactly.
Ghost and let Tyreek take out the bread until he finished college.
Exactly.
Yeah,
So,
that's what Ghost
and
did.
a lot of wealthy people do that too. They do that for their kids.
Yeah.
They say they have to. A lot of these guys are billionaires, multi-millionaires. They put that into trust.
What's some of the like things you've seen that somebody
So
put in
you'll
policy?
see things like you have to graduate college by this age, by 25, for example, and it's really up to you. By 25, they have to have a stable job, or they have to.
So what happens, right? If you don't abide by those,
You don't get the
You
money.
don't get the money
at all. You don't get it. There's no way around it.
So, yeah, because
there's
that's
literally
the
no way
rules.
around it.
And the law has to follow it because that's your last will and
So
testament.
let me ask you
essentially.
something, right? So aside from a will, right? Like how easy it is to set up a trust?
It's not that hard. You can go online and set it up. Although I would say definitely get it done. It might be a bit more expensive, but get it done by an estate planning attorney. Estate planning attorney.
What is that?
So that's an attorney that focuses solely
EPA.
on estate planning.
EPA. And that's a really good idea, right? So like
I don't gotta trust nigga. I'm broke.
If you own a house, you
we
need
don't
one.
have it, but did you see? But that's it. But that's a great thing, right? So something we kind of spoke on, right, in terms of like our children, right? So like we all obviously are here because we're fathers, right? So what advice would you give to young fathers in general, about like insurance and things of that nature for their children?
I would definitely say inquire with your financial advisor if you don't have one. I know Chris will be able to, 095 will be able to put my information offline, but definitely inquire as to the benefits of having a policy for your child.
And don't be selfish, because the biggest thing is most people are selfish. They think when I die, I'm not getting the money, so why would I let somebody else get the money?
That's what the problem is.
Don't be
That's the
selfish.
starter.
No, that's crazy. That's not even selfish. That's just fucked up.
In reality,
I can't use this money.
So obviously because of certain compliance reasons, right? So there's certain things that for legalities Samson can't say, but I can attest to it. So like both my children have insurance policies, right? Like my son, like as soon as the insurance card came in the mail, the next day.
Or his social security
Sorry,
card.
my bad.
Yeah,
Because you said fidelity shit earlier.
That's what I'm saying. Yeah,
it's the
get it mixed up a little bit.
Sometimes. As soon as his social security card came in the mail, the next day I was picking us up in Whole Foods. I was on the phone with my insurance person, like, yo, listen, I need to get my policy. I need this. This is what I need, right? Because what it does, it's not, you're not looking to say, oh man, my child's gonna pass away. What am I gonna get? That's not what it's for.
Yeah.
I'm looking at it as like, yo, my son and daughter are gonna have at least this amount of money guaranteed to them, right?
That
And
never
also
had.
what it does is it protects their insurability. So basically meaning for the rest of their lives, they have this policy. And if God forbid they develop some sort of ailment or something happens to them in the future,
You don't gotta go John Q.
I don't. I mean, don't get me wrong. If the hospital wild out, I'm going John Q full Ford flex. Like it's. I don't.
You gotta
For
do
my
what you
kids
gotta do.
and my family,
That's a
don't
fact.
listen.
I'm going John Q.
I've
Fuck
had
that.
security in hospitals called on me for stuff. But anyhow, but it's just like it's about being responsible for your children, because you don't want to wait till they're 30 and you're 60, 65 or whatever the age, and be like, oh man, you should go get a policy now. Yo, bro, the amount of money that I spend on my kids' insurance policies for a couple of $100,000s forever, I spent that money today already. Guaranteed.
I'm getting a policy tomorrow.
All right. Now you say that, right? Because question for you now. Back to how you said the permanent policy, once you get a permanent policy, is for life, right? So, example, say I'm a father now, right? And my kid, I get a permanent policy on my child. And it's a set price for the rest of his life, right? So, say, God forbid, like 20, 30 years down the line, I pass away, right? How does my kid pick up that policy and continue that policy? Or can he continue that policy?
Yeah, it's under his name.
But I'm saying, what's the process on that?
So because he's the owner, he has all rights to it. So the owner pretty much has the whole rights to everything. So if you pass away, it's a bit of a tricky situation. So what I always recommend, as you go on in life, as your kids get older, or even if you have parents that have policies, try to introduce them to the financial advisor. So they have a relationship. So if anything does happen to you, it's a seamless transition. The worst thing is having to call a 1-800 number and waiting on a hold. Everyone's crying, and it's not a good situation.
Hold on. Pause this. Mom, you hear that? Because you got me in the policy. I ain't even no financial advisor, so you got to figure that out for us. She watches every.
Okay.
She got you a policy.
She have a policy.
Okay,
she does.
You know, you could take out a policy for her.
What you mean? Explain that.
Like you can pay a policy monthly for your mom, and God forbid she passes away, you get the money.
No, she made her own policy.
Yeah, but you can start one for her.
I think I'm on her policy.
You're on hers, but you can start one for her.
So she have two policies.
Just like I would do for my grandfather, but he's 99, I can't get one.
Yeah.
So you could start.
So I get another so she can have two policies.
Yeah, you can.
Is there a limit?
Listen, you can have as many policies as you want.
You can afford.
You just can't be overinsured, and what that means is
explain it.
The typical guideline since 9/11 is about, if you have kids, I think is about 30 times your income. I typically try to go with 30 times. So if your income's 100,000, the max in total coverage you can have is, let's say, 3 million. That's how much. So you can get as many policies, although I wouldn't recommend that. I would say, the more each policy you get, the cost is a cost per policy. So one policy, if you can cover the full amount, but there's no regulation as to how many different policies you have. That's something you should consult your advisor on.
All right, one more thing. I got a lot of questions.
Yeah, it's okay.
I always have a lot of
questions.
This is the time for it, man.
Yeah, so
right here, bro.
The same questions you asking, somebody else probably thinking about that right now.
Yeah, I'm like thinking all crazy stuff, right? Because I hate like paying bills, right? So say I take out a policy, right, and like say
if I can interject, it's not a bill, people. It's a investment. It's an investment in your future.
Right. Correcting me, I'm sorry.
Yeah.
So example, say like I'm paying like $50 a month, something like that, right?
Okay.
And how he said earlier, he said you could buy out the policy, right? And it's actually better, right? Say like I'm doing like versus like a car, or like I'm paying off a car. So say like I'm paying $100 a month, $50 a month, and like 6 months later I want to drop like 10,000.
That goes towards the equity.
That goes towards the equity. So say I drop 10, 20,000 2 consecutive months back to back, and 20 years later I could take that back. That money is mine. It's like I'm putting it towards savings, basically. Explain that maybe.
So
if I got it correct.
If you're doing that in that particular scenario, when you're about to put the money in, speak with your advisor. They should be able to run a projection for you and see how that would look in 20 years and how much you can take out.
Yeah. So if I was to do that, how much is that interest on that?
Yeah, it grows. The money, depending on the type of account you have.
Okay. Yeah, but that's definitely for a permanent account. You want to do that
definitely.
For a term.
A term, whatever you're paying is what you're paying. It doesn't change.
It only matters.
That's it.
Okay.
You're literally, and when I say this, I'm not lying. You're just paying for the cost of the policy.
That's it.
I gotta check if mine is permanent or term. I'm not.
Oh, yours is definitely. If it's okay for me to say, definitely term.
It's definitely term.
Yeah.
All right.
Permanent is almost always going to be more expensive. Like when you see these commercials on TV. $1 million or whatever for $10 or $15. It's term, and most of the time it's not that number.
Another question. So say I have a startup. Say like funds is not right, and like I don't got it, and I see the cheap policy. I'm gonna take it, right, and I keep the cheap policy. I do 20 years on it, right. I keep it for about 4 or 5 years, right. And now I'm in a better place financially, and I'm like, okay, I want to transition this term to permanent. Can I do that, or have to wait till the term is over?
You could do that from if you have the right term, from day one to the last day, you can convert whenever you want.
And if I was to convert,
gonna be more.
what is the chance?
It's
The
based
difference
on
is
it's based on your age. The only reason why it would be then based on your health at that point is if you got a bad health rating in the beginning. So let's say you were a bit overweight when you first got it, and 4 years later,
so for me.
I mean you're not overweight, but
Calling to the doctor.
BMI. But I mean, as far as like if you were 5'4", 400 pounds when you first got
okay,
it,
you talking about
and
like
then
obese.
now, yeah, exactly, and then now you're 5'4", let's say 200
it's
pounds.
different. Overweight and
The big
obese, two
difference.
different things.
Yeah.
I'm just overweight. In the
I mean,
doctor.
if you're slightly over the BMI, that's fine. But if you're like obese, is a bit.
Can be morbidly.
Yeah, you can't
Alright,
be.
got
You can't be like struggling to breathe, not to be mean or anything. But
that could be mean. It's
yeah.
okay.
But I mean, at the end of the day, it's a business. You have to think about it. With the insurance company, they're not in the business of losing money. That's the reality.
But what happens after the term? You said, let's say 15, whatever. Let's say this is 15-year term. What happens after that term?
So,
Just in general, let's say a person is just like, some people, they just like, I didn't see no benefit of it.
okay,
What
because they
happens
never
if-
die.
Yeah,
but,
exactly.
in that case, think of. I mean, it's morbid, but
That's what it's here for.
Should have died.
I mean, thinking about it, after let's say 15-year term from your example, if you don't end up using it, hopefully God's grace, think of it as you're renting an apartment. What happens when you rent an apartment? You leave and that's it.
Yeah, so it's kind of, it's really kind of.
Nah, I get my security deposit back.
They don't secure it.
So in a sense, it really doesn't make sense then to.
Well,
not say it doesn't make sense because I mean you offering both, but then it would just be more
beneficial
to go with the
permanent.
So
Yeah.
now that I think about it, the reason why I did take the term, because one, it was cheaper. I'm just figuring it out.
But that's
And I can always, he told me I can always switch to permanent. So if you in a better space money wise, it's better to have it now than not have it. So that's exactly why I did it. That's exactly
that's why the question
I always
That's why I
say
said what I-
is don't let the fear of or the price of a permanent policy stop you from getting any type of policy now.
Yeah.
Because what can happen is, this should give you a real life story. My partner actually, he was one of his clients, so he was working with this client. A couple. They were in their mid 40s, so they were young. Working on getting a policy for the husband. Literally spoke to them and said, okay, we're gonna speak 3 days later. So the following Tuesday. That Sunday, the guy passed away.
Wow.
That's
So-
crazy.
The guy was in perfect health.
I have
by
a
the way.
question for you, right? So, the two-part question. Well, it's two separate. Anyhow, so you show up to somebody's crib, talking to them, and say, "All right, listen, this is probably the best, policy based on your budget, blah blah blah, whatever the case may be, right?" And you tell them, "Okay, it's $45 a month," and they say, "Okay, no problem. When you bring it, I'll pay the $45." Should they pay you that $45 now, or wait till you bring them that policy?
If you want coverage immediately, there's what's called temporary insurance, and most companies have this. As soon as you hand a check to your advisor, whoever you're talking to, you have coverage. You have temporary coverage.
That's what I did.
Yeah. So immediately you hand it over to them, you have coverage.
That was what I call a loaded question. So listen, when you go see your financial person, you get insurance. Cut the bullshit. Cut
Just
them the
pay
check. Because
Is
if you
that-
fucking die in your sleep tonight,
Yeah.
at least you get something. You might not get the entire face value of what the policy is supposed to be, but at least you get something.
They won't get nothing. Somebody
And the good thing is,
Yeah.
The family gets something.
and even if you,
I mean, you get a funeral.
even if you cut a check
I would say
or
at
give them
least.
your account number, they're not gonna process it for 2 days, but you still guaranteed that coverage from that day.
It's a fact.
So it took him probably like 2 days to process mine, but I had it.
it was good.
After I spoke to him, I had it. The second I spoke to him, I had it.
I really think that.
Oh wait,
like,
no. The second the money is received, that's when they have it. But,
For real?
Yeah. It's
So I
not-
could have died. They have to.
No, but but if you cash that check and he was good for it,
Yeah, I mean, if the money was received, is an exchange.
It
of
doesn't
business,
matter.
So
yo, listen,
okay,
dude, I do
see.
everything electronic now anyway, so don't worry
Yeah,
about
so I
it.
mean, this
Yeah, I
is-
gave them the account number. Boom.
Swipe the card. Just
That
boom,
was
boom,
it.
boom.
I had another question.
I put my same question too,
back.
but it's all right.
I probably the same question.
As I can quickly interject, just really, when you're looking at this type of conversation, take your mindset away from looking at it as a bill. It's not a bill. Too many people, especially in our community, unfortunately, the first thing they say, "Oh, that's another bill I gotta add," and I have to correct them. It's not a bill.
But that's the reason why we're not asked you about permanent and then term. Because typically, if you're doing the permanent, I think a person would look at it not as a bill, more
What?
so because you gave it a perfect example. They got some people that just like, I ain't trying to pay no rent.
Yeah.
So then I'd rather own my shit. So then if you got something permanent, this is yours.
Yeah.
If you got and whatever, like you said, I agree. If you rather have it than be without it during the time, but at least if it's permanent, you can't look at it as you really can't look at it as a bill because long term is not an end to it. So at least like I'm pretty sure that somebody out there is watching is gonna say it's term. What happens after 15 years? So then what happens to all my money that I gave? That's what I'm just being transparent. That's somebody's gonna think that. Because no different than like a person if you lease a car or you finance a car. You're like, I gotta give this back. So some people don't do it. So then the same thing.
But it's the same thing as leasing. If I lease a car for 3 years, when I give it back, I get a new one.
Not necessarily.
You can.
Or you can walk away.
You can.
Or you could just turn it into a finance.
Yeah, but then most people are not gonna do that. They just gonna get another car.
Yeah, but if you get another car, you just get another term. You get another term, right?
You can, but you just now you're 20 years older.
But now you're older.
You gotta redo it all over.
So you want to protect your insurability.
So the same thing now. Let's say you bought a Honda right now and you was leasing it. You ain't gonna want a Honda when you probably 50. Maybe you might want to be like, yo, I'm retired now. I want to upgrade to.
But that's the point, right? So now when you retire, you can afford something better, right? So if you do this, even if you decide to wait that long, you can afford something better. Now you can afford a better whole life policy.
Switch it to permanent.
I mean, I'm not saying that you can't, but in a sense too, I'm trying. It's in a sense like for whoever's watching to deter themselves to look at it as a bill. Because anyway, there's somebody out there that's like, I'm never gonna lease because that's just a bill. It's not gonna be mine.
Yeah,
but then you have a person that's out there saying, yo,
I'm just trying to get by.
Yeah. So then you have a person that's like, yo, permanent. Yo, I'm 30 years old. I'm retiring at 55. At least that, and then whatever, I could just live my life like you said. At 55, he living our life. And my kids is covered. I ain't even worried about that. I'm not worried about renewing that again because they good. Whatever that is already, technically it is invested.
Yeah.
It's not on a term on the investment.
But like I said before, it's better to have it than don't.
But that's what I'm saying. I'm not saying, but it's also.
No, but what you're saying is 100% real because like that's exactly what like the Styles said. Like that's exactly what people at home.
Oh, thank
you.
They think.
Definitely. They're like, yo,
that's what I was thinking at first. I'm like,
it is.
This shit ain't gonna die no time soon.
I'm explaining to y'all, like, listen, and I'm very transparent. I'm explaining to y'all the same exact way. I'm gonna tell you exactly what Steve said to me. He's like, yo, this was like in like November, December. He like, yo, it was like, yeah, the guy said like $50 a month or whatever. He said, yo, I'm gonna buy it after my birthday party. I said, what the fuck?
Because
I said, wait, so you want to wait till you buy and spend all the money on your birthday party before you spend $50? I said, bro, buy Ace of Spades is like $200. Like, what are we doing right now, bro?
But that's that term because you're talking about a bill.
Sometimes I could be real ignorant. I did take a while to get the policy.
Me too. I'm still in the process.
It's not. It's not about ignorance though, in a sense, because it's just like.
Procrastination.
It is, but it's just like you didn't really know. Like ignorance, in my opinion, ignorance is like, yo, you see, like the light is red, but you're still gonna zoom through it. Like, that's ignorant. But it's like if I don't really understand or don't know.
No, the definition of ignorance is lack of knowledge. That's what it is.
But people for purposeful ignorance. Because if I told you something, then you're purposely choosing to ignore it. Yeah. Then you're purposely being ignorant. So the light is red, and you're purposely going through it. You're purposely doing those sort of things. But you can't help everybody. But the point is, to those who do understand and do want to be helped, like that's what we want to be able to do.
And that's why I brought up the other side of it, because like I said, whoever's watching is going to be sinning. It's like, damn, so if I did this for 5 years, then what do I walk away with? Like,
if you die within this 5 years, you're covered.
But then that's not. But the thing, like you said, when the first thing interview, he said people don't want to talk about it, so kind of because they look at it as a bill.
You know,
me too. I wasn't gonna get it because I went to see a fortune teller, and she said I'm gonna live way past 80. So
I thought you said to God, you don't need to worry about a fortune teller.
Sorry. What was your question, son?
All right, the question I have for him, right? I'm sure a lot of people, the viewers out there, probably thinking also, right? So, I want to start a policy, right? No matter if it's permanent or term, I don't know if it's a difference, right? And you give me the numbers on how much I have to pay a month, right? To start the policy, do I pay that, how much the quoted, or do I pay the quoted plus like extra? How does that work to start the policy? How much do I have to pay out of pocket?
So it depends on how it works. So when you first sit down with an advisor, they could give you a quote, but that quote could change depending on your health.
Yep.
Your age is fixed. Your gender is fixed. Your health isn't.
All right. Say the health. Say you gave me a quote, right? $50 a month. We go through the health. The health is good, right? When it's time to start the policy, do I have to? Because I know when you're doing car insurance, you start the policy, you pay through extra to start the policy.
No.
So you pay whatever.
When the court-
whatever.
Yeah,
Yeah.
it comes out every month. The same amount.
Okay, no.
But-
I thought like it was like a startup fee or something like that.
No.
All right, cool.
But like I know some advisors what they'll say to you is like, all right, like, listen, the best, well, they would say the worst rate with the worst health is $70 a month. Pay me the $70 a month. Why? Because your health will probably come back better, so your policy could be cost you less, or if you can't afford that $70, you now get that additional whatever that gap of insurance is. It might be a couple of $100,000.
I'm kind of lost.
All right, so say I tell you, bro, I'm selling you this cup, right? Listen, I'm selling you this cup for $70. When I run back to the office, they might tell you, you good, and I can get you this cup for $40. But if you can afford that $70, I'll get you a bigger cup.
So basically saying pay extra on a policy.
Well, you don't know what is extra,
you don't know.
You don't know. But what I'm saying is, if you can afford to buy a bigger cup, I'm gonna sell you the
Make
smaller
sure you
cup
get
at
it.
the bigger rate. So now when I go back and they say, yo, you good on it, you get that bigger size cup of a policy that benefit at
so
that
say
same rate
like-
that you said you could afford.
Yo, you
So you hedging
I want
yourself.
to do it $20, and then you come back like you good. Like now I could do $50. So
No,
you
the
could
opposite. You say, yo, I could do $50.
Yeah.
Right? But we're looking at a $20 policy.
Yeah.
So now it comes back and you say, yo, no, $50 is good. You can afford a $20, no problem, and you're insuring you at that. Now that $30 extra is gonna buy you X amount of
All right.
$100,000.
What I'm saying is like I lock in on a $20 policy.
Nah.
You lock in
is
on
at 50 because that 50 is $200,000-$300,000 more than that $20 policy
All
that
right,
you
so-
would have
all
locked in
right,
at
so-
that you could afford.
Right.
So just
you buying
consoling-
the very worst version of what you can get.
Oh, so you start off by saying you pitch out there what you like the minimum what you could do. You say 20, you come back to say 50, and the 50
Nah,
would be
you
better.
pitch out that you can do 50.
Okay.
But if you're good, you might the policy
pay
at
less.
20. No, the policy at 20
Can
probably
buy you 50.
Can buy you 50 basically.
Explain that.
All right. So maybe I'm still making it pause, right?
Go ahead, kid.
Go ahead, Kay.
So
This is our producer here, y'all.
You're getting the worst policy. The worst part, like you're getting the premium if you have the worst health, but you might not know, right? So you're getting it anyway, right? Then if you're good, you have the option to get what you would have, which you would be able to.
It's like a before and after type of thing.
It's
Kinda.
basically like you can afford 93 gas, but your car take 89, 87. You understand? Basically,
I
you
got
can
it.
afford 93. So you
Got
keep
it.
putting
So
93
so-
in
right,
it,
so if I
and your
wanna go
car's
back to
lasting
the-
longer because you're
Got it.
getting
Right.
more
Got it. So you might
out of
as
the
well
gas.
got it.
There
Right.
you go.
So, but when they come back and they can say, well, listen, your car, you can take the 87 if you want.
But it might
You're
break
guaranteed.
down
However, for what you gave
Take
me,
93
you
though.
can get 93
Take this
though,
93
bro.
in diesel. You
Take
feel me? It's
93,
lit. All right, got
Be
it.
good.
Got it.
You know what I'm saying?
Got
Afford more. Be able to have that. You know,
Go a little extra mile. You know?
Unfortunately,
Got it.
we're out of time.
I got one last
Exactly.
question though. We could let this rack up. And this again for other people.
He's drunk.
You say so?
You drunk?
Oh, you
Nah, I
should
ain't
say
drunk.
so. Last of the first and 30 seconds.
Nah, I'm good. Oh yeah, that's nah, I'm good. Let's say somebody's coming for a policy and they saying like y'all saying, oh, I could afford $25. They can't just. It's not like you can't set them up on a certain type of policy that just could that what they can afford.
Depends on their health. If they're 100% health, they probably pay 25, right?
It
No,
really
no.
depends. It really depends on the amount they want. Because at the end of the day, when it comes to term, it's not a permanent way you can kind of play
So
with the
that's what
numbers.
I'm asking
The
now.
numbers are fixed. So if you're in great health and you're a certain age and you're male, for example, and you want 250,000, for example, the number is the number. There's no playing around.
That's for term. What about an
With permanent, you can mess around the
you
number,
can, that's
but you're
what-
definitely not. If you want a good amount of permanent, you're not getting a permanent policy for $25.
Yeah.
So when people see that in the news, I get all the time. People say, "Oh, I saw this commercial." I'm like, "It's a term policy."
So call them.
And then I always tell them to call them, and then they come back and they always say, "Oh, it wasn't what they said." I said, "I know," because they tell you what they want you to, what you want to hear,
Yeah.
to get you
What
through the door.
grasp your attention.
Marketing.
Catches your eye.
But to piggyback and close off that point, right? So that is why it is word of the day quintessential for you
Ooh.
as a parent to get insurance on your children, because a permanent policy for the rest of both of my kids' lives for more than a few $100,000 is not costing me more than $35 a month.
I'm doing
No
mine
way.
tomorrow. I'm gonna call you tomorrow.
So do you understand?
Gonna
So,
set up someone's policy.
just so you understand, right?
People, one more
I
time.
have a 9.5-month-old who just started walking. By the way, shout out to you.
Yeah, that's
Congrats.
And I have a 14-year-old. Right? When they are both 30 years old, that several hundred thousands of dollars policy will still be costing them less than $35 a month. Mm-hmm. Like forever. When they're 90 years old, it's gonna be costing them $35.
And it's under their name, or you have to switch it from your name to their name. It's under
we can
their name,
transfer
right?
that.
Yeah.
I can transfer it when I so choose.
If you
It is
add
the children's policy is a permanent policy. So in the future, it is not a tremendous amount that I would like to do that. But what I'm protecting is their insurability. So God forbid something happens when they're 25, 30 years old and they go and have their own family and they're like, oh man, something happened, and they can now have an option to get more insurance based on that face value. I'm just protecting their
question I have.
availability.
And then another thing that's very important that you're doing is you've set their mindset up to understand that insurance isn't a bad thing. Mm-hmm. So when they get to that age in their early 20s, they won't feel bad to, okay, I want to get more or whatever. It's all about mindset. Like I said, a lot of times we may be the first generation that's hearing about it as a good thing.
Mm-hmm. Mm-hmm. So what I'm about to say, piggyback off that, like I get a policy, right? I give it to my child. My child turns 25, 30, right? How easier is for them to add on their family to the policy? Like to their can they add their family to their policy, or they have to start a whole new? As
far as a beneficiary, or
no, they own, or they will have to just set up a whole nother policy.
So when you say add on their family, what do you mean?
Who gets the money?
All right. See how I added my son to the policy.
But Chris did something different. You see, I have my son on my policy, but he started a policy for his son.
For himself.
For his son.
So
that's his son's policy.
It's the
and his daughter's policy
and his individual policy.
Yeah,
right.
exactly.
So when you add so Steve's son gets his money.
Yeah.
Right.
If,
My
if
son
I,
also
God
gets.
forbid I pass away.
Yeah. The same here.
Or
However,
most likely, the next of kin, if he's underage, will get the money.
Yeah. So
correct. Who the guardian is.
So
right?
So it's two different types.
There's beneficiary and separate.
To the beneficiary and it's your child having their own policy.
Correct.
Right?
Exactly.
So still, you can open up your child own policy, not a beneficiary,
and pay it
at any Social Security.
Yeah.
Social Security.
Same way you can open one for your mom, just like I said.
100%. Yeah.
So
But with your mom's.
You're paying your mom's policy, but the difference is, just in case, God forbid, your mom passed away, that money goes to you.
Right. Only difference is your mom has to sign on. You can't get a policy on somebody
you
you
don't know.
But my child is my child, so my child's policy, like we're the beneficiaries of it, but that's not the intensive purpose.
That's why you say you have two policies. It's not much of a cap on how much you have it.
So,
okay.
No rules. Up to you.
Like this, to wrap it up, I will be putting contact information for Samson in the comment and information area below. I want everybody to just really take a step back and understand like what we're trying to talk about right now, right? And this is just we're chipping away at certain things. Right? Last week we talked about credit and things of that nature. This week we're talking about insurance, and we're going to continue to talk about financial literacy because we have a ton of questions. There are a ton of we can sit here for hours and hours and hours and have questions to talk about different things, but the only way you're going to get somewhere is by putting one foot in front of the other. You got to take a step at some point. And if you don't understand, reach out to us. We'll put you in contact with somebody who can probably better explain it if we haven't already. But the point is to be out there, helping our folks, help each other, telling a friend to tell a friend, because that's the only way that we're going to continue to build and strive as a community. This is something I'm very passionate about. This is something I tell my friends about. Definitely. Before they tell me about a basketball stat, before they tell me about what we're doing this weekend or what brunch is going to be at, bro, like, what are we doing? If somebody send me a GoFundMe again, I'm telling you, it's just what it is. It's not
Chris
happening,
got the bag,
bro.
so
it's not happening. And whether I got the bag or not, it's not the point of it. It's like, what you spent today on nonsense, you can be taking care of your entire family if you so choose. Mm-hmm. So with that being said, listen, we love you. Samson, thank you for being here.
Thank you for having me.
Thank you all for your questions. We love y'all. Peace.
Peace.
Dada.